Good afternoon, folks. This is ICT with a market review for November 7th, 2016. All right, we have the dollar index as the daily chart on the left-hand side. And I have two areas at which I want to draw your attention to. This up candle here and this candle here. Okay, in between this range, it's only been two candles, one trading up and one trading down. It traded the range between 97.85 and 98.30. And it's important that we watch that level going forward. I think if we trade up higher, we get about midway point 98.05 to 98.10 is the next upside objective. Whenever we see a void that's been closed in by two candles, okay, that is going to be sensitive around the midway point. Now, if it trades through it, obviously the next level of resistance or upside objective would be coming in the form of 98.30. And if we get through that, then obviously we'll be looking for a return back up into the 98.60s and 98.50. So 98.50, 98.60 should we give up this order block in here. Now, I had two levels to watch. Yesterday, I gave you during pre-market analysis. The down candle here would be the next objective, and then this one here is what I liked a lot, 97.75 and 97.84 candle. The levels over here, you can see them. 97.75 was hit. Look at the sensitivity off of that. Then we had a rally up into 97.84. We had sensitivity as well. The down candle in here, that was last Friday. We had just came away like 2 pips away from the low, anticipated low of the week. And then we saw price on Sunday gap up and trade higher on the, we saw price trade higher on the dollar on the heels of Hillary Clinton being pardoned a second time for her email debacle. That trading through that previous down candle, we used the opening and the wick as a sensitivity. You see today's trading, we traded down into that body of that candle here, 97.22. That's why this level is over here, 97.22. Price did trade through the previous day's high. Back here, let me show you what that looks like. Okay, here's that short-term high here being violated on this candle here. Then it trades back down into the opening of that candle over here on the daily charts. That's why it's important we trade on the daily charts or off the daily charts, not 5-minute or intraday charts. We're actually trading off of the banking levels seen on the daily chart as indicated over here. So we saw the down candle become a bullish order block when it's violated on the upside. The opening on today's trading trades down into that order block, and then we saw a nice rally up into a level we already called yesterday, 97.75 to 97.85 or 84 in this case here, which it does trade to 97.87 without any difficulty at all. The euro, we are expecting the range in here to be filled in. One of the levels I did not notice at the time of my recording last night, I was trying to get through it a little too quickly. This up candle right before the down move, this is going to be a breaker. So we're going to be watching this level here, the 110.15 level, to be sensitive on downside objectives. So we may see a little bit of a pause in here. I don't expect it to turn around on a dime, but we may get a little bit of a bounce at 110.15. But ultimately, we're looking for a 109.90 return and maybe a run below 109.65. If we get any lower than that, we'll be looking for a retrade back to 109.45 to 109.50. On the cable, we see price obviously doing similar acrobatics like the euro. We're looking for a range to close in down in here. It's based on this candle's high and the exposed up move here. That's all over here. You can see that at the 123.50 level. That's the last down candle prior to the up move. This is a bullish order block. So we are referencing, as I tweeted today on Twitter, this is the next downside objective, 123.50. And dollar CAD tried one more time to get above, convincingly above that 134.05 level. Wasn't able to do so. Gave up the ghost one more time, and we're probably going to make a run for that 133 big figure, as we were mentioning last week. If we lose 133 big figure, we will be looking to close in this range down here and trade down into the 131.50s. So there's the breaks for the bulls on dollar CAD, which is a little, again, perplexing because dollar CAD should be doing what the dollar index is doing, showing strength, and it's not happening. So we're still seeing that break in market symmetry, and as long as that's there, it makes trading not as high probability as we would like it to be. So it's why we're sitting on our hands because of the election, all the uncertainty. You just want to be doing it. Trust me, folks. Don't try to be a cowboy. I will give you all a pre-recorded session again tomorrow because it is election day. I will be following closely on the polls, and if I see anything that's noteworthy for a tweet, I'll do that. But we will be doing live session again on Wednesday morning. We'll be joining each other at around 7:30 in the morning, New York time, Wednesday, my time. Until then, I wish you good luck and good trading.